Why crypto has been so important that I've been pounding the table over is because it's fractionalized. You can have 10% of your net worth in Bitcoin, and I can. That is the game changer here. It gives people a chance to not get left behind. Well, I own less Bitcoin and more Ethereum. So basically still 100% of my liquid net worth is in crypto. And I know everybody always asks the split. It's currently 55% Ethereum, which is going up every day because Ethereum's outperforming, which I know some people don't like to hear. 25% Bitcoin, and a kind of tail of an equally weighted basket of other protocols and tokens, plus a bit more of a concentrated bet in community tokens and NFT side of stuff. I spend probably 20% of my entire week, every week, both talking to institutions, presenting to institutions, answering requests. They're all over this. Everybody is. Everybody, if you talk to anybody from Galaxy to Luca to any of these companies that see the onboarding, NYDIG, all they're seeing is wall-to-wall requests, incoming, onboarding. It takes a while. People don't understand that, for institutions to go, oh, well, we're going to buy Bitcoin. Okay. How do you mark to market it? What is the open? What is the close? Which price do you take? There's no single exchange. Then how do you custody it? How do you account for it? All of this stuff takes months of work.
Which is interesting because it's been a year since MicroStrategy first purchased Bitcoin. We saw Tesla come in. Then Michael Saylor hosted a meeting of 2,000 CFOs or representatives from companies. And there was this sentiment that by March or April, we would see 100 more companies adding Bitcoin to their treasury. And it didn't happen. Then obviously we saw the correction. People could argue that that's a reason that they didn't come in then. But do you think it's just a function of what you just described? It's going to take 6 months or a year, 18 months?
It's a function of two things. For institutions, it's a function of what I talked about. It just takes time. Right? There's a lot of people to get across the line, and you need to appease a lot of people. For the corporations, it's how you account for it in GAAP accounting. This is the big problem, is you can only mark it down, you can't mark it up, and it has volatility in your quarterly earnings. So only people like Michael Saylor will accept it, others won't. So everyone's trying to figure out, can we get GAAP accounting rules changed? Or if not, is there a vehicle that will be able to allow us to do it without putting it on the balance sheet? Is a way of having it off balance sheet. So that's why the corporations are slow. They want to do it. I've spoken to many, but they're like, these accounting rules, we don't know what to do. Well, you can trade a cycle, and that's okay. That doesn't mean you've cheated on your girlfriend. You can trade a cycle. If you want the dirty truth, you should never own Bitcoin. The actual truth is you should own alts or stable coins, because when Bitcoin outperforms, it's generally when the markets are falling. And in which case you shouldn't own Bitcoin. You should just own stable coins. And when the markets are in a bull run, generally the alts outperform, particularly the large alts. So like Ethereum. And therefore, at that point, you should own those. And maybe you should never own Bitcoin. Now, that's the extremity of the whole thing. So my view on this is, I think the space the market cap of the space goes up 100x from here over the next 10 years. So call it from 2 trillion to 200 trillion. I mean, that's ludicrous. We've never been faced with an asset class that does that in all recorded history in a period of time like this. Firstly, I saw the vitriol of the Bitcoin community when I, in October, started saying the ETH chart looks pretty interesting and ETH Bitcoin chart looks interesting. People were angry. They hunted me down online, and I was like, that always makes me, if somebody says I'm an idiot for looking at something, it makes me want to look at it. So I started doing work on it. And the assumption was from the Bitcoin community was Bitcoin was special. It was the only one. And it was driven by store of value, and everything else was a shitcoin. So then I started looking into Metcalfe's law, and I realized that Bitcoin and Ethereum were priced off exactly the same mechanism, as were all of these tokens. And that it wasn't special Bitcoin in how it was priced. It was basically the number of users. And, yes, Metcalfe's law is the number of users and basically the interconnection between those users. And I looked at that and went, oh my God, well, Ethereum's just launched DeFi and NFTs and all of this stuff. So there's a lot more activity going on the chain than there was on Bitcoin. And that made me start to pay attention. Then the chart started breaking out. And then I realized that the breadth of what was happening, the speed of the growth of the network in Ethereum was twice as fast as Bitcoin. So it was likely to grow twice as fast as Bitcoin in price. Simple as that. I wrote an article saying the greatest trade. And basically, I looked at Ethereum, looked at the on-chain data, and realized that, okay, we've just gone through the EIP 1559. So that's burning ETH. Then I looked at, okay, on-chain, what's going on? Well, there was a huge amount that had been taken off exchange, an enormous amount that had been staked for ETH 2.0. There's a massive amount that was also in DeFi locked away. And that left 13% of the entire supply available on exchange. So the supply is falling every day. It's probably about 11% now. And yet demand was exponential. So if you've got exponential demand and limited supply, you're going to get an exponential rise in price. I looked at this and said, not until ETH 2.0 comes out is this going to change, because everybody's going to stake, because there's no point not staking until that moment, right? Because the ETH price is going to rise. So everyone's incentivized to stake or to take it off exchange, and there's no supply, and it's going to keep falling. And they're burning ETH. I mean, holy shit, you never get an opportunity like this. I'm like, this is better than Bitcoin was in March 2020. This is a monster. If you imagine that you've got a network that is now incredibly attractive in risk reward with incredible attractive yields, no wonder the gas fees are high, right? Because it's incredibly in demand. Does that push people out into Solana and other things? Of course. And that's great, because it's a multi-chain world out there. So people who need cheap, fast transactions will move to different chains. People who want the benefits of Ethereum will remain on Ethereum. And there's a huge investor base that will remain on Ethereum for the reasons we've talked about. Now, a lot of this gets solved at ETH 2.0. I think it gets done by March of next year. Who knows? But my guess is it's a buy the rumor, sell the fact, because everyone can unlock after it comes out.
Sure.
And everybody sells their ETH to, take some chips off the table. So my guess is we'll have this complete parabolic move into 2.0 and then the unwind afterwards. Much like we saw with Coinbase. If you remember, Coinbase was the exact high of Bitcoin.
It was.
And as soon as it came out, everything plummeted, because buy the rumor, sell the fact. If you notice online, this is happening everywhere. It's anti-Tesla, anti-ARC, anti-EV in generally, anti-climate change, anti-vax, anti-crypto. Bitcoin people don't like Ethereum, right? There's this weird split. When you step back and say, what is going on here? There is one narrative that ties it all together. It's the fear of change. We're going through the fastest period of change of all human history. And it's hard for people. And they want to know what they know. And they can't deal with all of this change happening. So Peter Schiff, had a long discussion with him today on a different podcast. And it's like, Peter just doesn't want to know, really. We're never going to persuade him. He doesn't want to know. He knows what he knows. It's what he values. And that's it. The people who hate Tesla or electric cars or whatever, it's to do with they're moving away from something they know. The trusted car, the engine, the part of the culture, and that all goes. And it's the same with the vaccine, which is a technology. People are like, I don't trust the technology. It's because the future's coming at us too fast. And Bitcoin, with the rest of the crypto space, is kind of the same, because they're like, but we had the perfect thing. And as you say, yeah, but there's different perfect things for different outcomes. And in fact, nothing is perfect here, right. But there's a bunch of use cases for a bunch of different things, and that's okay. It doesn't stop Bitcoin being amazing. It doesn't stop gold being amazing. And it doesn't stop a Ferrari petrol engine being amazing. That's okay. They can all exist, but the world is changing, whether you like it or not. I think it's going to be reasonable. And I think the battle that happened a couple of weeks ago or last week, I can't remember, everything happens in like a whole year happens in a week in crypto, but that showed that there is a huge bunch of young voters who will not get pushed around. and that people want change. Younger people want change, and the older people fear change. I get it. That's normal. But in the end, somebody carries more votes, and it's going to be the young people, because of the millennial and Gen Z combined with us Gen Xers in the middle. We carry the swing vote now, not the baby boomers. So I do think it changes, and I think they become reasonable. They will occasionally try heavy-handed tactics, and we should expect that. Anybody in this space understands what roadblocks get put up. They eventually get taken down mainly. How many times has China banned Bitcoin or crypto? It's like every cycle.
Yeah.
God, yeah. If the whole of government is debating cryptocurrency, it's over. It's been, that battle has been won. There is no, is this for real or not? Is this going to last? Are we going to make it? Of course we're going to make it. It now depends how fast. Well, they can never catch up in assets. So buying an asset is saving for future consumption later. And you want the asset to go up over time, and then you can consume more. So you buy a house, and then you hope to sell it when you retire. And you hope it's gone up more than the cost of living. That's why we have assets. So the problem is that wages aren't affected by this monetary printing. All the variable stuff like corporate earnings and wages don't change. They move a bit by the rate of CPI inflation because a lot of them are referenced to it, but they don't change. But the cost of assets keeps going up. So your future self is getting poorer because you can't afford them. So what you're doing is destroying future wealth, future consumption. Now, why crypto has been so important that I've been pounding the table over is because it's fractionalized. You can have 10% of your net worth in Bitcoin, and I can, and Mark Cuban can, and we're all on an equal footing, right? That is the game changer here. And so it gives people a chance to not get left behind.